Hi guys, let's do a brief state recap on happenings in the cryptocurrency markets. So the cryptocurrency market has experienced a major shakedown. The crash has erased over $1 trillion in market value. Investors and traders recorded heavy losses over the past week, some losing all their trading capital. People are asking questions. How did this happen? Who exactly is responsible? Is the market ever going to bounce back from this? What's next for the market and investors after this seismic shift? In this video we'll bring you up to date with what's been going on in the cryptocurrency market, the probable causes and what traders and investors can do in unsure times like these. Before we go on, you're watching Bashbox, your favorite plug for cryptocurrency news and updates. Subscribe to our YouTube channel, hit the notification button, like and comment on our videos. Need a reason to do that? I'll give you a few of them. You get timely updates on the markets here, and we help you make profits off the market. Let's get into the details. A perfect storm has hit the cryptocurrency market. Since the turn of the year, the market has taken on a largely bearish turn, which became a lot stronger in April and May 2022. Cryptocurrency fans and investors had a fun ride from late 2020 through the year 2021, powered by exuberant risk, taking in an era of low interest rates. But now the car is coming down the other side of the roller coaster. The cryptocurrency market is seeing one of its worst sell-offs since a market rally in 2020, sparking panic among investors and raising questions about why crypto prices have been increasingly sensitive to gyrations in the stock market. In particular, stablecoins are in the spotlight. That type of cryptocurrency is supposed to, as its name suggests, have a stable value because the tokens are pegged to the value of a currency such as the US dollar or a commodity such as gold, providing relative insulation from extreme volatility. Cryptocurrencies have lost over $1 trillion in recent times. Bitcoin is down from an all-time high of $69,000, more recently losing 28% in the last 7 days to its present $28,500 in value. Ethereum has followed suit and is trading at $1,900. Altcoins like Cardano, Shiba Inu, Litecoin, Dogecoin, Solana, Ripple, BNB, and many more have lost between 25 to 33% value. Worst hit is Terra Luna, which has dipped an outrageous 99% and is trading at 2 cents from an all-time high of $118. The fear and uncertainty is palpable, and lots of traders are switching to stable coins. But even stable coins are tricky at the moment. TerraUSD has lost 38% of its value and is trading at 62 cents presently. Recession fears are everywhere. Cryptocurrency Fear and Greed Index is pegged at an all-time low of 18 presently. People are unsure what's next. A huge number of investors have seen their life savings gone in this market downturn, some of them opting for suicide. In order to move forward, let us spend some time on a forensic analysis and examine the probable causes of this crash. Finance and investment experts have given their broad view on happenings in the market. According to them, several macroeconomic conditions have impacted the market, bringing us to the present situation. Notable among them are COVID, which has caused a serious setback for major economies around the world over the last couple of years. China, the world's second-largest economy, has had a strange 2022. China's zero-COVID policies have led to shocking lockdowns in major cities such as Shanghai, freezing economic activity. China is also dealing with a real estate investment implosion, falling business confidence, and startling declines in economic activity. Why is this troubling? Because China was projected to account for about 1/4 of global economic growth in the next few years. When China sneezes, when Chinese officials forcibly quarantine anybody who sneezes, the world could catch a cold. The United States might have been in a strong position to deal with a Chinese slowdown if its other trading partners were all doing well, but they're not. In the United States, restaurant activity and airline travel are nearly back to their pre-pandemic highs as most Americans return to something like normal. But we don't know what else the virus and its variants are going to throw at us. Could the next variant be more transmissible and more deadly and also get around our immunity? I hope not. But these are the 2020s. Anything is possible. The war in Europe has also played a major part, with Russia and Ukraine being major suppliers of basic food and energy. The Russian invasion of Ukraine has hit exportation of basic products like wheat, oil, and gas badly. All of these have led to supply chain issues and inflation. Economy is shrinking, and the central bank says inflation will exceed 10% this year. War in Ukraine has sent energy prices skyrocketing throughout Europe, and most economists believe that the continent's economy will contract this year. Europe seems very likely headed toward both stagnation and inflation, a really dreaded combination. More recently is the rising interest rates in the United States. On May 4, 2022, the Federal Reserve raised its interest rates by 0.5 percentage point, the biggest hike in 2 decades, to fight inflation. One of the Federal Reserve's mandates is to keep inflation around 2%. Well, so much for that one. Inflation has skyrocketed past 8% since the Joe Biden administration resumed in 2021, Kwon, leading the Fed to announce a spree of rate hikes designed to slow down economic activity. In theory, the plan works like this. The Federal Reserve raises interest rates, which makes it more expensive to borrow money for mortgages, cars, and business investments. As a result, investment in all those categories and more declines, and the economy cools off. But here's the problem. Modern history has very few examples of unemployment this low and inflation this high where rate increases haven't caused a recession. On the path to crushing inflation, the Fed may destroy trillions of dollars of wealth and economic activity. Interest rates have been known to cause recessions in the past. When the central bank is too aggressive, it is generally viewed as a damper, not just for the stock market but for the whole economy. All of these variables have increased the probability of a recession, leading to massive sell-offs in the stock market. Nasdaq experienced its sharpest one-day fall on Wednesday. The cryptocurrency market, as a digital asset space, recently has had some form of integration with traditional markets, meaning it begins to mirror the trends in the market. As a result, there has been massive sell-off in the crypto space, leading to the market crash. A loss of about $1 trillion has been recorded so far in the market. While some are hopeful that the cryptocurrency market can bounce back, some experts believe the crash may be permanent because of broader fears about a global recession. So where do we go from here? Well, if you are a trader or investor, here are a few pieces of advice that we believe can be useful to you right now. First, think more on a long-term basis. The market can be super confusing if you only look short-term. It's most likely in a year or two that your investments look meaningful. The cryptocurrency markets is a volatile one. Higher highs and higher lows happen, so try to be less fearful and less emotional as much as you can. Second, avoid panic selling. Don't sell at a loss unless you really have to. The market has recovered from various crash moments in the past. It will most likely do the same this time. In other words, this too shall pass. Thirdly, see the volatility as an opportunity. It's a great time to buy the dip. The market is cyclical, and when it finally begins to surge, those who get in now will likely make as much as 10 times their investment in the next couple of years. Just to buttress this point, in the past week, Bitcoin has had an inflow of over $45 million, according to Bloomberg. That's the opportunistic traders going in. We hope this has been helpful. Please note that these are our own opinions. Do your own research before investing, and never invest more than what you're ready to lose. We will not be liable for any losses suffered. That's all we have for you on this edition. Don't forget to hit the subscribe and notification button. See you next time.